Um, hmm. Not sure if I'm live. Okay, it does seem that I am live, I think. Okay, all right. Great. Howdy, guys. Jimmy Song here. Welcome to another episode of Off Chain. Sorry about the little bit of a screw up. It's hard to tell whenever the thing is streaming because they never tell you exactly when it begins and so on. Anyway, this is the show I normally do on Mondays, but of course we had the giant Halving party, and that took forever. And we couldn't actually cover my newsletter on the show because it was literally 12 hours of like 30 plus people pretty much the entire time. So yeah, it was kind of a crazy day. I don't know if you got a chance to see it, but I mean, we broke all sorts of records. Had 14,000 live viewers. I think that video has over 100,000 views. It's just absolute insanity. So anyway, glad to be here with you guys. This is Bitcoin Tech Talk Q&A. This is the show I do every Monday, but again, it's Tuesday. And this is where I talk about the news from the past week, all the different things that are going on from a technical perspective, maybe a little bit of an economics perspective, and so on. Anyway, the Bitcoin Tech Talk newsletter goes out every Monday, and you can take a look at it and subscribe to it. It's jimmysong.substack.com. It's in the show notes. But yeah, there's a lot of different things that have happened this week. So this past week, so I want to make sure I cover them and let you guys know. Some of this stuff. Again, I was hoping that we could cover some of these. We covered at least like one, but yeah, let's take a look at some of this stuff. All right, so first of all, it was the Halving yesterday. If you guys haven't heard, and this set of illustrations by Amity Uttarwar is absolutely excellent as a way to get an explanation of what the heck the Halving actually is. So she's a core developer. She's funded by Zappo, and she's done a great job of explaining what's going on. So what is a halving? New bitcoins are created whenever new block is mined. This is the only way new bitcoins come into existence. This is called the block subsidy. The number of new bitcoins per block was written into the code since the very first release, and the first subsidy was 50 bitcoins, and every 210,000 blocks the subsidy cuts in half, and that's called the halving. And that's it happens every 210,000 blocks. And she says that the Bitcoin halving is scheduled by block height, not calendar date, at block 630,000. So it goes from 12.5 to 6.25. And it's anticipated on May 11th, which was yesterday, and it certainly did happen on that day. And you can see the schedule. So that was May 11th. The next one's going to be block 840,000, and that should be roughly 4 years. 10 minutes times 210,000 is 2.1 million minutes, which is roughly about 4 years. All right, Bitcoin V01. The total circulation will be 21 million coins, and this is based on like the supply schedule. So 50 times 210,000 is 10.5 million, as she's pointing out, in the first 4 years. And then 25 times 210,000 is 5.25 million, and then 12 and a half times 210,000 is 6.25 million, and so on. It's based on open market competition, and there will probably always be nodes willing to process transactions for free. Lol. So not anymore, obviously. So those are the first 4 panels of her comic. She actually has more right here. But wait, a digital money system with a finite supply is a brilliant idea. Unfortunately, the implementation had a bug. So this is the one bug that was in there, which is a right shift based on the height. But the thing is, if it goes past the border, then it's undefined behavior. So in order to fix that, Peter Woolley did Bit42 and basically made it so that there's no right shifting. It's just 0 if it goes past the border of, I think it's a UN64 or something like that. What enforces the limit? You do. A Coinbase transaction is special. It's the only type of transaction that is allowed to create Bitcoin. So every time a full node receives a block, they make sure that it has that one Coinbase transaction and it's less than or equal to the max subsidy. So in July of 2019, there was actually a block that paid too much. I believe it was mined by Bitcoin.com, actually. So as a result, it got rejected by the rest of the network. So anyway, she is. This is a great comic to send to somebody that gets easily intimidated by technical jargon. Amiri has a talent for sort of explaining these things well. So that hopefully gives you an idea of what's going on. All right. Second story that I wanted to talk about is the BitMex broadcast at 1300 UTC every day that causes the feed to spike. So this will be our long read. Essentially what you need to know is that BitMex sends out withdrawals just once per day, and it's always at 1300 UTC. And what happens is there's a lot of transactions that just go in at that time. And these are highly inefficient transactions for multiple reasons and take up a lot of block space. So apparently InstaGibs is going to be helping BitMex with this. But I mean, I want to go read through the report and talk about exactly why it's so inefficient. All right, Bitcoin. All right, Nick Emblo has published his own independent verification of the S2FX model. And this is the article that actually goes through the S2FX model. He uses his own data and checks the stock to flow. His estimates are actually higher, believe it or not, than Plan B's. Plan B said like 288K was the top. He's saying 1.48 million, which is kind of insane. But that's his conclusion from using the same sort of methodology as Plan B, which is kind of crazy. But that's the conclusion that he came to after running some analysis using Bitcoin. So yeah, I mean, kind of crazy, but that could very well be the case. Who knows? 1.48 million would make a lot of people very happy. All right, Fabian Yar, he's a core developer. I think he's supported by OKCoin. Created an article talking about sort of the missing Bitcoin that we know is unspendable. And there basically there's right now supposed to be a particular number of Bitcoins based on the number of blocks, but there's some amount that are missing. So this is where he goes and investigates, okay, where are the ones that are missing? And it's 182.679208835 Bitcoins. So where did those go? So first one is kind of obvious, the Genesis block. So Satoshi mined the Genesis block and put it into the client. So this was kind of a little bit of a chicken or egg situation. So he created the Genesis block. But part of what makes that interesting is that as part of the client, it doesn't count the Genesis block as part of the UTXO set. So that's 50 that are gone right there. In the early days, the second one is a bunch of transaction IDs that were the same for multiple blocks. This got taken away with the introduction of BIP34, which forced miners to put the block height into the Coinbase transaction. But essentially, there were a couple of blocks that had the same exact transaction ID as a previous block, and they overwrote essentially their own UTXO. So that was another 100 Bitcoin. So there's 32 missing. There's a bunch in op return that's spent, so that's another 3.7. There's a bunch of unclaimed miner rewards. So a miner doesn't have to take all of the miner reward if they don't want to, and for probably some buggy reasons, they didn't take these blocks didn't take their entire block subsidy, which is what all of these are. So that's where 182 bitcoins have been provably unspendably burnt. All right, Blockstream has released a satellite product, so this is pretty exciting, and it's a satellite kit. So the question that sometimes I'll get is what happens if the internet goes down? Then Bitcoin's useless. Not really, because you can download the entire Bitcoin blockchain via satellite now using the Blockstream satellite kit, and this may come in very handy in places that have restricted internet, like North Korea, for example. But yeah, it's available for pre-order. I think it's the basic kit is $279. The pro kit is $750, but then you need like a receiver, which is $179. So really cool project. I'm hoping for more of that to happen. Louise Singer has a pretty thorough technical overview of Simplicity. If you don't know what Simplicity is, it's a smart contract language that's been developed by Blockstream with the aim of being able to prove that a particular kind of smart contract is secure. This is one of the giant weaknesses of Ethereum, for example. Solidity contracts are extremely difficult to know whether or not they're secure. It's essentially having to prove that it doesn't have any bugs. So they built this language from the ground up, and it's been released for a while. This developer went in and programmed against the Haskell implementation, and goes through all of the primitives and like how to build up stuff. It's absolutely mind-boggling that they can do this with such a simple language, because Simplicity is fairly simple. So if you're interested in Simplicity, this is the way to start learning about it. Used Yager has published an article on multipath payments and how they work in Lightning. So this is something that LND 10 has released, and if you want to know what that is, it's basically like instead of using a single channel all the way to the target, you use multiple channels. So you might have several channels open, none of which have enough money in a single one, but using multiple channels you have enough. That's what this is allowing, and some really interesting additional benefits as a result of multipath payments. First is that you'll start using more smaller channels, because right now the big channels are in high demand, because you need to make sure that from beginning to end that everyone has enough capacity along that entire route. If you're using multipath payments, then what you're getting is the ability to split up your payments. So you use the smaller channels a lot more efficiently, and they tend to be cheaper anyway. And also it's a nice security improvement, because you can't just observe the network. If there's multiple payments going on, you have no idea like how much actually got acted or what was being bought and so on. All right, Paul Tudor Jones is now bullish Bitcoin, and if this is the actual letter that he wrote to his investors, and you can read it online now because it's on Scribd. But he's talking about like sort of hedges against the various inflationary pressures that are on there. The one thing that we did find out is that he's mostly long on Bitcoin futures, which are cash settled, rather than buying Bitcoin itself. And that might be why CME is setting records on Bitcoin, because CME is the futures market. Chad Bitcoin outlines a bunch of ways in which he's made mistakes with Bitcoin. This includes, like buying Bitcoin from, like KYC exchanges, investing in various companies, not building early enough. It's just like if you're early to Bitcoin, this is a good one to read because there's just a lot of mistakes that you're going to make. Hopefully, articles like this help you to not make them. All right, Pete Harrigan has applied the S2FX model to housing. This was a very interesting article because you had the S2FX model that Plan B released like a week and a half ago. And I hadn't thought about it, but it totally makes sense that you can apply it to housing because there's a stock of housing and there's always new housing being built. So he currently lives in San Francisco, where the flow of new housing is very, very small, and the price is very, very high. So he was like wondering whether or not this formula would actually predict something, and it turns out it does. So you can see like the stock to flow on certain real estate that they have value based like they're along the same line as the S2FX model. So we're seeing some like real estate for a while now has been used as a store of value. The fact that they lie along the same line tells you that there's something like really interesting about this, or that it's telling us something about the economic reality of scarcity, that it isn't just a spurious correlation, but that there's something to it that you can apply the cross asset model to something as far away as housing. All right, BitMex Research. I know I'm going to rag on them in a bit, but this is an excellent article on Ethereum 2.0, and it goes through in much detail what is going on with Ethereum 2, what they're planning to do, what the various stages are, the beacon chain, shard chain, state execution, how there's a one-way peg. Essentially, you can go from Ethereum 1.0 to 2.0, but not the reverse. There's a coin issuance and the amount of staking that can happen, and this is the Ethereum inflation rate at a particular point, and so on. And it goes through just how hard and difficult or complicated the sharding is going to be, the staking is going to be, and so on. I mean, it lays out just how complicated this whole thing is and how weird this transition is going to be. And I tend to agree with the article. It is just extremely complicated. And there's going to be probably a decoupling between the prices of Ethereum 1.0 and 2.0, because you can earn staking on 2.0. You can always convert from 1.0 to 2.0, but they're going to have different properties and they're going to have different security vulnerabilities. So I think those are going to have some consequences. Bitmain is having some serious conflict. So Micree and Jihan have been fighting over Bitmain for a while, and it ended in some sort of a physical altercation. There's actually a video that's available online. Essentially, there was Micree, I guess, got some sort of legal representation thing in China, and somebody physically took it away. I think it was one of Jihan's allies, and that guy, Lu Yao Lu, has been arrested. So, I mean, this is, I know they, Antpool Mine blocked 630,000, but this is a company that absolutely revolutionized the mining industry. Now, they're kind of caught in, sort of internal political battles, and, rivals like MicroBT are pretty much taking over at this point. All right, and this last one is a research paper from the Imperial College of London, and this is a research paper talking about various different blockchains and like sort of the transactions that are on them. You can see the summary of the findings. Specifically, we observed that the current throughput is only 20 transactions per second for EOS, 0.08 transactions per second for Tezos, and 19 transactions per second for XRP. We showed that 95% of the throughput on EOS was used for an airdrop of a valueless token. 82% of transactions on the Tezos blockchain were used to maintain consensus, and that only 2% of transactions on the XRP ledger resulted in a value transfer. In other words, most of the transactions in all three are blockchain spam, and they're probably doing this as a way to make their blockchains look better. All right, so that's about it for the stories. Let's go on to my Twitter feed and explain some of the tweets there. All right. There was a bunch of stuff that we did. All right, so okay, so that was the one before. Here we go. All right, so unlike the Olympics, it won't be delayed. Unlike the presidential election, it won't be tampered with. It's based on monetary policy of Bitcoin from its inception, and it's happening in less than 1,000 blocks. Are you hyped yet? So yeah, it was. It's kind of crazy that I said that a week ago. I guess you guys were, because you guys were all on that live stream. If you own Bitcoin, your best days are ahead of you. This somehow got 2,300 likes, my most popular tweet by far this week. But yeah, they are the best days are ahead of you. You're taking advantage of an opportunity that probably comes once in a generation, or many generations, once every 500 years maybe. Societal investment habits badly need reform. Think about how much time and energy is spent evaluating and deciding on investment opportunities. Now think about that time and energy going into producing goods and services. Bitcoin fixes this. So there's a lot of time and energy spent, just trying to keep your money. And the sad fact is that that's not a very good use of your time. All right, 5 regrets you will always have in Bitcoin: not learning about it sooner, not buying more of it when it was cheaper, selling it, spending it when another method of payment was an option, trading it to invest in altcoins. These are all regrets that I've had, and it kind of sucks, but that's how it is. There should be a pool for the Unix timestamp of block 630,000. And, it's just kind of a fun bet. I think would have been fun, but nobody really did it. You don't really own your own house. You have to pay property taxes. You don't really own your dollars. Authorities can seize your bank account or inflate it away. You don't really own your physical possessions. Authorities can arrest you. Bitcoin is something that you can really own, and this is the metaphysical nature of Bitcoin. The fact that it can be up here it makes all of the difference. That you actually possess it. It's like a belief, and it's a property right like no other that really can't be taken away, which is very different than anything else that we've ever had. What we're seeing now is the demonetization of non-USD fiat currencies in varying degrees. Guess what will fill that gap? Bitcoin is politically neutral money. Essentially the dollar is taking over for now, but Bitcoin is making inroads, and that was my point. I did the drinks in quarantine thing. M2 money stock last time Bitcoin was at 10,000, 15.4 trillion. M2 money stock now, 17.5 trillion. That was just 79 days ago before this tweet, which is kind of crazy. But that's the fiat money increased by 14-15% in a matter of 80 days, which is I should have done unemployment too, because it was like 3.5%. Now it's like 14.5%. Another 20.5 million people that are either in or getting into a cycle of debt slavery. The way out is savings and opting out of the fiat debt slavery system. Bitcoin is the path to freedom from debt slavery. So we saw the unemployment numbers. It looks horrible, and that's a lot of people that are starting to get into a period of debt slavery, and that's not going to be good. If you're an altcoin back holder, your best and worst days are ahead of you. Both days will be the same. It's a day you sell your bags for Bitcoin. And this is the truth. Until you sell, you really don't know how enslaved you are to your altcoin bags. Good properties of money: fixed, unchanging, reliable, secure. Good properties of technology: iterating quickly, expanding to more use cases. Much harm has been done by those who treat Bitcoin primarily as a technology. Bitcoin is money first and technology second. Sadly, a lot of Silicon Valley bros still think that it's a technology. What can you say? So yeah, my ranges in this Sunday survey were probably a little high. It's the amount of Bitcoins you're aiming to own, up to 1 to 50, 50 to 300, 300 plus. Probably should have been 1 to 30 and 30 to 300. Probably would have been better, but yeah, I mean, I don't know. It turns out most people want somewhere between 8,000 and $400,000 worth of Bitcoin at least currently. Nuriel, Peter, Roger, Vitalik, what do they have in common? They're obsessed with Bitcoin and never miss a chance to hate on it. In other words, Bitcoin has free rent in their minds. Bitcoin grows stronger and feasts on the tears of its enemies. Are you tired of winning? And this is true. All of those people write tweets, like disparaging Bitcoin, but that just means that they're obsessed with it and they know where their competition is. We've been trained to ask for permission to create and disrupt. This is a fiat mentality. This is why Bitcoin will make more entrepreneurs than any business school. And this is the truth. Is people feel like they need to ask permission, and this is part of the education system. It's training people to ask for permission instead of just doing stuff. And it's nice for the state if they can get you to comply with whatever they demand, but it's bad for the entrepreneur. It's bad for society. We seem to have sped up blocks being found last night. 64 blocks took 8.5 hours, which is about 7.5 minutes of a block. We have 36 blocks to go as of this writing, which at that rate is about 4.5 hours away. Yeah, so, it turned out that it did come a little earlier. The projection from the night before, I think, was like 7 or 8 p.m. It came more at like 3 p.m. So there were a lot of miners mining. That was a pretty epic stream, and I published my newsletter yesterday. Today is a little bit like the New Hampshire primary of Bitcoin. In other words, the season is just starting. We're starting the season for the Bitcoin bull run is basically what I'm saying, and this is just like the very first event that everyone prepares for. But yeah, it's gonna keep going. Things I learned yesterday: Tone Vades needs a copy of the Winklevoss book. F2 Pool sent a message about about money printing in block 629999. Loop Dash doesn't use SegWit for on-chain transactions. Novogratz bears a striking resemblance to Walter White. So yeah, all good things. Thank you, Solio Walia, for your super chat. All right, let's see if there are any questions. What do you think about running Raspberry Blitz implementation of running a full node on Raspberry Pi? I think you should totally run it if you're comfortable setting up a Raspberry Pi. I think that's a great way to run your own full node. All right, so this is the website that I wanted to show everybody yesterday. It gives you a sense of what the fees are at. Let me make it a little bigger so you can see, but you can see that the next block is going to have on average about 115 sats per byte. The block after that, if they were found right away, would be 101 and then 96 and so on. This is how you can kind of tell how clogged the mempool is, and you can also see sort of visually what's going on as well. You can see that most of this stuff cleared. Instead of on the top, it's on the bottom in this graph. Basically, these are the high fee transactions that they come in, and you can see them slowly starting to increase. You can see the BitMex thing happens at 9 a.m. here, and it creates sort of bad incentives for everybody. Speaking of which, let's read through this article. The daily BitMex broadcast at 13:08 UTC, using a fingerprint to reason about a footprint. At around 1300 UTC every day, BitMex, a cryptocurrency exchange and derivatives trading platform, broadcasts multiple megabytes of large transactions into the Bitcoin network. This affects the transaction fees paid during European afternoons and US business hours. The transaction size could be greatly reduced by implementing current industry standards in the Bitcoin wallet. Excuse me, I need to... Sorry about that. In the Bitcoin wallet. Where was I lost my... Oh, yeah. Once activated, utilizing Schnorr and Taproot combined with output batching seems to be the most promising for improving the transaction count and size. The observation that BitMex broadcasts transactions every day around 1300 UTC is not novel. The transactions are mainly withdrawals initiated by BitMex users and some internal UTXO consolidations. As part of the wallet security practice, BitMex reviews and processes all withdrawals by hand. They claim that doing so multiple times a day would be infeasible and worry that spending the transaction broadcast... all right, guys, wait 1 minute. I have to pause the stream. I'm really sorry. Sorry, guys, I had to take care of something, but I am back. All right, so let's... the analytics site is mempool.space. Thank you, Reynaldo Kalashian. Yeah, what steps would I recommend for somebody that's in the IT field? I mean, a lot of the Bitcoin companies just need, just IT infrastructure too. So, like contacting some of them and seeing what jobs they have available. I think Justin Moon tries to aggregate all of the different jobs that are available. So that might not be a bad idea. All right. As part of their wallet security practice, BitMex reviews and processes all withdrawals by hand. They claim that doing so multiple times a day would be infeasible and worry that spreading the transaction broadcasts over the day, which would lighten the burden on the network, could decrease their users' experience. BitMex transactions have a unique fingerprint which originates from their in-house multi-signature wallet solution. All transactions strictly spend pay-to-script hash outputs with 3 of 4 multi-sig redeem scripts. The 4 public keys used in the redeem script are uncompressed. The hashed and encoded redeem script results in addresses with the prefix 3BMEX. BitMex does not spend SegWit outputs, and all transactions have a version of 2. These properties make it straightforward to recognize BitMex transactions on the chain and in the mempool. So, in other words, we have a bunch of transactions that are very specific. So the fact that they're using 3 of 4 and that the pub keys are uncompressed is really, really bad. So uncompressed pub keys are 65 bytes, compressed are 33 bytes. So there's 4 of these keys that you have to show. So that's 65 times 4, that's like 250 or so. Versus doing it on, using just compressed would save 32 bytes per key, and that takes it down to like 130 or something like that. And then, if you use like SegWit, that would be another, goes from 130 to a fourth of that, so less than 40 bytes. So they're taking a lot of block space away from everybody else. A data set consisting of the transactions observed by the Bitcoin transaction monitor between September 2019 and March 2020 is used. In these 6 months, BitMex broadcasts around 415,000 transactions into the Bitcoin network. Summed together, these take up around 593 megabytes and pay a total miner fee of 181 BTC. So that's a lot of mining fees, and that's a lot of data. 593 megabytes of data on your full node is straight from BitMex. Like in the 6 months between September 2019 and March of 2020. So I mean, that's kind of crazy. 6 months. They're responsible for like 0.6 gigabytes of your full node. This represents about 2.8% of the total bytes and 3.8% of the total fees broadcast in this period. The median broadcast contains 2,209 transactions. Okay, so that's a lot of transactions. 5,688, 3 of 4 multi-signature inputs. Pays 0.95 BTC in miner fees and has a total size of 3.16 megabytes. So it's at least 3 blocks worth of transactions. Generally, it's a little more than that, that they broadcast every single day. The input count, the miner fees, and the total broadcast size grow linear with the transaction count. On weekends, fewer transactions are broadcast than on weekdays, and thus the input count, total miner fee, and broadcast size are usually less. The distribution of the transaction count, input count, and total fee and total size of the observed Bitcoin BitMex broadcast. So you can see just how much of it there is, and so on. With more than 500 bytes each, the 3 of 4 multi-signature inputs account for most of the transaction size. About 26% of the transactions have 1, 36% have 2, 32% have 3, 3% have 4, and about 2% have 5 or more inputs. The transactions have either 1, 46% or 2 outputs, 54%. The miner fees for withdrawals are not paid by BitMex. They are deducted from the withdrawing users. The transaction fee rate does not depend on the input count nor the transaction size. The users choose a miner fee when withdrawing. However, they do not know how many inputs the final withdrawal will spend, and thus cannot reason about the transaction size and required fee rate. All observed transaction fees are a multiple of 10,000 Satoshi, which is the minimum step size the withdrawal front end allows. 10,000 Satoshi is the smallest and most commonly observed withdrawal fee. It is followed by 100,000, 20,000, 50,000. The most commonly observed fee rates, which result from the combination of a user pick fee and an algorithm chosen by the number of inputs, are 17, 9, 60, 12, 88, and 18 sats per B byte. So in other words, what they should be doing is figuring out how many inputs there are going to be and let the user choose how many sats per byte that they're going to withdraw with. Instead, they just it's kind of random how many inputs are going to be in your transaction, and you just sort of have to guess. So you don't know whether or not you're going to get in early or late. BitMex starts processing withdrawals at 1300 UTC. It takes a few minutes before the transactions are broadcast to the networks. On some days, the first transaction can be observed as early as 1305 UTC. In median, the first transaction arrives at 1308.30 UTC. It takes about 2 minutes 14 seconds in median until all transactions arrive on weekdays, and 1 minute and 1 minute 57 seconds in median on weekends. So you can see like when in general these get into the block. On 3 days in the observed 6 months, the broadcast was delayed by a few minutes. These broadcasts are out of bounds for this plot. On the 1st of November, 2,449 transactions were broadcast starting at 1340 UTC. On the 14th of December, 1,715 transactions were broadcast at 1335 UTC. And on the 7th of February, 2,794 transactions were broadcast at 1340 26 UTC. So obviously something happened, probably an upgrade on the back end or something like that. But whatever the reason, they delayed broadcasting for those. The 25th percentile of the broadcast transaction takes about 10 minutes to confirm. 50th percentile about 27 minutes. 75th for about 71 minutes. The 80th percentile takes about 2 hours. 86 for 3 hours. The 92nd over 5 hours. 99th over 10 hours. So basically they shoved all of these into the mempool, about 3 or 4 blocks worth, and they have varying fee rates. So the last ones typically take more than 10 hours to actually get into the block. The effects: the broadcasting multiple megabytes of transactions at various fee rate levels has immediate and noticeable effects on the networks. The fee rate estimators adjust their recommendations, and the wallets using these recommendations set a high fee rate when constructing a transaction. The minimum fee rate for block inclusion rises and the time to confirmation spikes. Fee rate estimators correctly react to the thousands of large transactions spread over different fee rate levels. They recommend paying a higher fee rate to outbid the BitMex transactions, which take up a significant part of the available space in the next blocks. The median estimated fee rates for inclusion in the next 3, and the next 6 blocks increase sharply around 1300 BTC. The block estimate stays at a high level for a few hours. The 3 and 6 block estimates continue to increase to a maximum between 1600 and 1700 UTC. So in other words, because they clog the mempool and cause the fees, they're using a lot of fees for those times. What ends up happening is that everyone else's fee estimator gets screwed up as a result of BitMex. The median estimated fee rate calculator by aggregating multiple estimates for each fee rate estimator. The estimates between September 2019 and March 2020 are grouped by minute of day. The median fee rate estimate is picked and averaged with the median estimates of the other estimators for the block target. A list of public fee rate estimators with their block targets can be found here. The fee rates of the newly arriving transactions react to the increased estimates. The average fee rate sharply increases at around 1300 UTC and continues to rise over the next hours at around 1530 UTC. The daily maximum is reached. From then on, the fee rate starts to decrease slowly. It takes until around 2100 UTC before it sinks below the level of the initial spike. At 1300 UTC, it is afternoon in Europe and morning in the US. The higher network activity at this time likely amplifies and lengthens the effect of the BitMex broadcast. However, most of the near vertical increase is presumably caused by BitMex alone. The effect on the US business hours is visible as a slow increase and decrease over multiple hours, and you can see that the fee rate tends to spike basically during the BitMex broadcast, and during the business hours in the US, what ends up happening is that the fees stay high during the day, and then they basically get much lower overnight. Calculating the additional fees to Bitcoin users pay as a result of BitMex broadcast is hard. There's no data for days without a broadcast to compare to. However, the magnitude of the effect can be estimated. Therefore, the following assumption about the effect is made. The BitMex broadcast causes an average fee rate increase by 4 sats per V-byte between 1300 and 2100 UTC. The blue area in the figure above visualizes the assumption. On average, 42.5 virtual megabytes of non-BitMex transactions arrive in the 8 hours between 1300 and 2100 UTC. If 4 additional Satoshi are paid for each broadcast byte, then a total of 1.7 Bitcoins of additional fees are paid by Bitcoin users per day due to the BitMex broadcast. This represents about 17% of the total fees arriving during the 8 hours and about 6.8% of the total daily transaction fees. However, it is unclear if the assumption holds. The estimate can only show the magnitude of the average daily effect. 1 or even multiple days without a BitMex broadcast would be needed to further study it. So it's hard to predict, but this an estimate of 1.7 Bitcoins of additional fees in a period of about 8 hours. Both the median block fee rate and the 5th percentile block fee rate spike and stay at an elevated level before slowly declining to pre-broadcast levels around 2200 UTC. Transactions sent with a low fee rate might take a few hours until they are included in a block during this period. The 5th percentile block fee rate represents nearly a minimum fee rate included in a block while not picking up, for example, the parents of child pays for parent transactions. The median and 5th percentile block fee rates are calculated from the blocks in the blockchain. The observed block arrival interval is used to group the blocks by minute of the day. The group median and 5th percentile are plotted. Oh, wow. Okay, so yeah, you can see that this is a median, 5th percentile, so like sort of the minimum you need to get in and so on. The median time to confirmation, the time between a transaction being first observed and its confirmation in a block, spikes between 1300 and 1400 UTC and remains at a slightly elevated level until 2100 UTC. Transactions are grouped by the minute of day and arrival time. The median time to confirmation for each minute of the day is plotted. Only transactions seen in the mempool and a block are used. Replaced transactions are ignored. Okay, so it's how long does it take for something to get in a block is basically that graph. Improvements. The effects can be minimized by reducing the number of bytes broadcast to the Bitcoin network. This can be achieved both by decreasing the transaction count and size of the individual transactions. The 4 uncompressed pub keys used in every BitMex input could be replaced by compressed pub keys. An uncompressed pub key is 65 bytes long and can be encoded in 33 bytes as a compressed pub key by leaving out the redundant data. Wallets started using compressed pub keys as early as 2012, and by 2017, more than 95% of all public keys added to the blockchain per day are compressed. By using compressed pub keys, BitMex could reduce their transaction size by as much as 23%. Transaction batching could also help minimize the amount of 3 or 4 multi-sig change outputs being created. Spending the 3 or 4 multi-sig outputs makes up for most of the block space used by BitMex. Every output created needs to be spent by supplying 3 signatures of around 71 bytes each and a redeem script with 4 uncompressed pub keys of 65 bytes each. This totals at around 532 bytes per input. However, an even more block efficient alternative would be to use a non-multi-sig wallet for user deposits, which are periodically consolidated into a multi-sig wallet. Spending a few high-value 3 or 4 multi-sig outputs for multiple withdrawals batched together greatly reduces the overall transaction count. Additionally, BitMex operation costs for manually reviewing and processing a few high-value transactions per day would likely be lower than they currently are for reviewing a few thousand lower-value withdrawals. In other words, instead of creating 2,000 something transactions per day, they can create maybe like 5 or 6 transactions, and that would be a lot easier and simpler and cheaper and better for Bitcoin in general. Spending SegWit would help as well. The large scripts used in the 3 or 4 pay-to-script hash multi-sig inputs would be placed in the witness data. There, they have less effect on the transaction weight. In December 2019, BitMex mentioned that their priority lies on upgrading their wallets to use P2SH wrap SegWit. They estimated around 65% in transaction weight savings for an average withdrawal transaction. Once activated, BitMex users and the whole network could greatly benefit from BitMex utilizing Schnorr and Taproot. 3 ECDSA signatures in the inputs of the BitMex transaction with around 71 bytes each can now be replaced by a single 64-byte aggregated signature. The 4 uncompressed pub keys of 65 bytes each can be replaced by a single 32-byte tweaked pub key. This pub key would be an aggregate of the 3 most commonly used pub keys. It could be tweaked for an additional spending conditions. A single pay-to-Taproot input does account for 57 virtual bytes. This is an 89% reduction when compared with the current input size. Combined with the output batching, this could drastically minimize the on-chain footprint of the BitMex broadcast. Additionally, Taproot would remove the unique fingerprint of BitMex transactions, which would in turn increase the privacy of BitMex users. So in other words, if you have Taproot, then you can use Schnorr signature aggregation, pub key aggregation, and have additional spending patterns and stuff like that. So there's so many improvements that could be made. Hopefully InstaGibbs can help them, because apparently he was hired. Conclusion: by using the fingerprint of BitMex transactions, their footprint on the Bitcoin network is observed and discussed. The daily broadcast has significant impact on the Bitcoin network and user fees. By utilizing scaling techniques, some of which have been industry standards for multiple years, the impact could be reduced. The BitMex is stepping in the right direction by planning to switch to nested SegWit. They, however, shouldn't stop there. All right, so those are footnotes and so on. So that's about it. Let me show a couple things. My books are available. This is the Little Bitcoin book, available in paperback, audiobook, and Kindle. There's also Programming Bitcoin, which is available in paperback and Kindle. Little Bitcoin book is also available in Spanish and Portuguese. Programming Bitcoin is available in Chinese, Japanese, and Korean. All right, so anyway, that does it for me. Thank you for joining me. It's not going to be quite as long as as the stream from yesterday. Thank you guys. Why does Luke downplay SegWit? Yeah, great question. So Luke thinks that big blocks are very bad for full nodes, because it's and he kind of has a point. It's an externality that everyone that's running on full node has to pay. So if a block is like 1.3 megabytes, as it's on average about that right now. If it's 1.3 megabytes, then that's 1.3 megabytes that you have to store. Previously, it used to be 1 megabyte. If you're using legacy stuff, then it tops out at 1 megabyte. So that difference, that delta, is what he's talking about. Is if you care about all of the full nodes and what everyone else is doing, or what's good for Bitcoin, what ends up helping all of those nodes that are running is having less of a block size, or in order to do that. So he thinks that you should pay a little more in fees in order to lessen the impact on everybody that's running a full node. I tend to disagree, though, because I think for the most part, people are, that's not what's keeping it. It is not the extra storage or the bandwidth and so on. All right, I think that's about it. Let me switch there. I'm still kind of wired from yesterday. My voice is all gone and stuff like that. So, I enjoy doing these things. I think we'll have to do another show that was much like yesterday. I know you guys seem to have enjoyed it. Anyway, thanks for joining. Fiat delenda est. This song is done.